Before we begin this interview, I want to bring to your attention, my friends, the extraordinary deal from our trusted friends at SD Bullion. Right now, through September 30th, buy 19 silver fill harmonics and get the 20th coin free in a mint sealed tube. And friends, at $14 an ounce silver right now, I never thought we'd see prices this low again. This offer is good through September 30th. Just click the SD Bullion banner ad at the top of SGTreport and it'll take you directly to our friends at SD Bullion, where not only do they now offer international shipping, but through September 30th, buy 19, get one free silver fill harmonic in a sealed tube directly from the Austrian Mint. It really is a deal too hot to pass up. And now, on with the interview. Hey friends, thanks so much for tuning in. It's great to have you back. I really mean that. It just means the world to me that you guys visit us every day for real news 24/7 at SGTreport.com. And many of you go out of your way to visit me on YouTube because you don't always get notifications thanks to YouTube. So I'd remind everybody to make sure that you're still subscribed and hit the little bell in the upper right-hand corner for notifications. I'm very eager to speak with Lior Gantz today. He's the founder of wealthresearchgroup.com, and we're going to talk about the economy. And in the pre-call here, Lior told me something that I thought was very thought-provoking, and I agree. One country, two economies. We're going to break that down right now. Lior, welcome back.
Thanks for having me, Sean.
Yeah, it's good to have you back. Hey, before we get started here, I just want to shout out this news item today from Zero Hedge. Budget deficit soars to $895 billion, and it will hit $1 trillion 1 year ahead of plan. I'll tell you, Lior, we've talked a long time, you and I and my other guests, Bill Holter and so many others, my buddies over at Silver Doctors, about the need to hedge your future with physical gold and physical silver. It's a story that's become a little long in the tooth, right? A little passé. But at some point, one would have to believe we're going to hit hyperinflation. And I always like to cite Amazon as an example of hyperinflation in stocks, $2,000 a share. Your thoughts on this $895 billion budget deficit?
Well, I think that the United States is a country that's in a unique situation. The reserve currency role is both a blessing and a curse, depending on how politicians and how bankers use it. And the United States has abused their role as the reserve currency of the world. And this created a situation where the national debt, the federal debt, is absolutely unrepayable, obviously. It doesn't mean that this all fall apart tomorrow, because the risk is known. Everybody knows around the world that there's a $21 trillion deficit, and yet foreign countries continue to buy the United States debt. And they do that for a number of reasons, which I can get into, but suffice to say that the idea that a $21 trillion debt is going to create a crisis immediately is not the same as to say that it will create a crisis imminently. So one thing is inevitable, but the other thing is to time it and to live by this code that, hey, this is going to happen tomorrow, and tomorrow might be 20 years away. So the reserve currency role is a very unique role, which other countries do not possess. And this is why the United States government can do what it does and basically live well beyond its means, instead of finding real solutions to real problems that happen inside of the United States as a country, as an economy. And this is the basically the unfortunate thing here, Sean, that real solutions cannot appear when there's easy ways out, and they don't have the political capital or the political discipline to come out with the truth to the people. Because obviously, when you generate in revenues, in tax revenue, much less than you pay out as benefits and foreign aid, Medicare, Medicaid, the entire entitlement list, and you want to police the entire world with soldiers in about 200 countries out of 205 countries in the world, it's ridiculous, and it cannot work forever but it doesn't mean that it will happen tomorrow, that this entire regime changes. It's very hard to make big changes when 6 out of every 10 currency units worldwide, held by the biggest governments in the world, by the largest institutions, by practically everyone, is a US dollar. So we're in a situation where everyone knows that there's a big risk and everyone knows that there's a big problem, but the solution is not that immediate.
Well, that's the thing, isn't it, Lior? Nobody knows the time, the day. Nobody knows when this system will come crashing down, and people have gone broke trying to predict it to be so. And I think the bottom line is that, well, look, in the pre-call, we talked about this idea of one country, two economies. I want to break that down, but I want to give people sort of a real-world example of that. You know, I hear this time and time again being talked about by the mainstream media, this idea that Jeff Bezos is the world's richest man, the richest man to ever live on planet Earth. And they conveniently leave out the Rothschilds, the Windsors, the Astors, the Vanderbilts, the Rockefellers, multi-generational banking wealth that easily dwarfs Jeff Bezos' $100 billion wealth or whatever it is that he's worth. But the point is that I do see what you're talking about in terms of one country, two economies, because Jeff Bezos, because of his hyperinflationary stock price, is now worth more than $100 billion. Meanwhile, many of the average employees at Amazon.com don't make a living wage, and many of them, as Tucker Carlson has been recounting lately, many of them are on food stamps or economic governmental assistance, because this man, despite being one of the world's wealthiest, refuses to pay a living wage to his employees. Is that a good example of this one country, two economies about which you speak?
It definitely is, and here's the thing: the post-World War II United States had what's called a miracle baby boom economy, where real-world wages were actually sufficient to sustain families, and sustain families where the wife doesn't even work. So on one paycheck, you can live and work and save up, and actually using wages only have a retirement. In today's world, you cannot live on a wage, on a wages basis, and have a 20, 25, even a 15-year comfortable retirement. It just doesn't work that way. You can't save your way to retirement anymore, even if two people work. So there's the idea is that the baby boomers had this unfair advantage where the rest of the world was devastated after World War II, and the United States simply on a global basis did not have a lot of competition, and therefore real wages were good after inflation. So this thing had basically reached its peak during the mid-60s, and during the mid-60s, the rest of the world started to recover. When you have other places recovering, it creates competition for wages, and therefore wages go down because competition goes up. There's more supply of goods and services and everything, of thoughts, of innovation, technology, and therefore the wealth starts to spread out. But the habits that the United States started to have were unsustainable for this new world, and therefore instead of defaulting, obviously on debt that had ballooned over the 35-to-1 exchange ratio with gold, they simply disconnected the convertibility of gold to the dollar. Now, since 1971, basically, the United States has been fighting with itself on how it should live in this new world, where there's 200 countries and 50 of them have a cheaper manufacturing base than China. In other words, in this kind of world, manufacturing cannot prosper in the United States, which has a very stable, compared to other countries, a very stable economy and a very stable currency, because wages go to where there's literally no regulations. People can work 12-hour shifts. They can live in tents and lean-tos and whatever else. And this is the way that capitalism is moved. Outsourcing of all the wealth out of the United States into other countries. And now China is actually becoming an expensive country. There's 50 countries that actually can manufacture cheaper than China. So manufacturing is even going away from China in the next 10 to 20 years. So this entire scenario has created two economies in the United States. And in 2008, basically what it did is it facilitated it, solidified it, and fixated it. While there was a lot of ways to remedy this before, with policy, with less government intervention, with the free market economy helping the United States become a booming economy again, it did the opposite. So in 2008, the rich became richer. How? By an asset bubble. Now, from 2009 up until 2015, only the rich enjoyed the recovery. They had a recovery. Many of the rich people are much richer than they were pre-crisis, Sean. So you wake up, you live in America, you're part of the 330 million people that live in America, and you don't see what the other people is seeing. You don't see how is this a recovery? To you, it's not a recovery. And the reason it's happening is because the recovery is specialized and it's contained within a few asset classes. In other words, if you had a large stock portfolio and a large cash position in 2009, QE programs helped you. You're an undeserving rich person, as Charlie Munger, the partner of Warren Buffett, says in his latest in the latest annual meeting. He said we're all undeserving millionaires here because the QE programs and intervening in the stock market helped the rich. It helped the rich with buying assets. You saw all these private equity firms, BlackRock, KKR, all the big ones going into residential real estate, buying, we're talking hundreds and hundreds and hundreds of residential mini storage malls. Whatever they bought is insane. During these years, there's these recovery years that were contained to the top 10%, 5%, right? So the rest of the people, they do not see a recovery. They live in the same country, they wake up, and they need to compete with 330 other people in the same economy, but they're underprivileged. They cannot do it. The opportunity is not equal to everyone because the money, the policy, the fiscal policy, the monetary policy, it's all going towards the rich. In 2016, after Trump was elected, this policy change that he brought with tax cuts, with deregulation, with many other things that he's doing right now, has basically expanded and broadened the recovery to more people, but not to the masses. So it's still the top 30% that are enjoying this. How are they enjoying this? There's a lot of demand for skilled labor, for educated people with college degrees, with a lot of experience. So you're seeing the people that are already living a comfortable life getting a raise in wages, or they can quit their job because there's better job offers. But still, to more than about 150 million Americans, this means nothing to them because they have no college degree, or their college degree is in an irrelevant subject, or they can't find a job because the jobs are in another state. There's so many problems that are basically contained within these pockets. And so you can live in the same America, but these national stats, these national averages where they say, hey, the unemployment is only 4%, or inflation is only such and such, it doesn't mean anything to you personally because it's not your own life, if that makes sense. We live in a United States which is not a national economy anymore. There are many pockets within it, and it's getting more and more specialized. Like you said, a person can grow to wealth of in excess of 140 billion in America with one company, while you can look down from the Amazon headquarters, which is in Seattle, and see homeless people living in what's called the jungle over there, which is like this homeless city inside, basically 10 minutes from downtown.
Yeah. And it's hard for me to get my arms wrapped around that sometimes, because in the city in which we live, I see homeless people panhandling with signs frequently, every single day, frankly, right off the interstate. And, I've always struggled with that because there are jobs that those people could get, but I think a big part of the problem is drug abuse. I think so much of that is caused by drug abuse, and that's a whole nother plague on our nation, which we could get into if you want to. But I think that the point you're trying to make is that there are a lot of crummy companies out there that work their employees to the bone for not a very good wage or not even a living wage. But by contrast, there are some companies, like I would cite Costco as a company that I've heard treats their employees very well, and their employees are very happy working there. Another one in the region in which I live is a company called Quick Trip, and it is the best local gas station you can go to. They sell food and everything else as well. And it's privately owned, and they do profit sharing with their employees. And their employees tend to stick around because they get a decent hourly wage, plus at the end of the year, profit sharing. So there are good companies trying to do decent things for their people. But at the other end of the spectrum, you have the Amazon.coms that are essentially leeching off the system and taking advantage of it by not paying their employees well enough. And then those employees have to rely on government assistance.
Sure. And Sean, I think the bigger picture here is the fact that you're going to see an economy that gets more and more specialized, and people that have general skills will be either displaced midlife. So you're 50 now. Your profession has basically gone away. It's either been outsourced or innovated over, and now your skill set is not valuable anymore in the United States. And you're going to see the government creating programs that tackle this, because the problem goes back to the base of what this United States is right now. The United States of America, if you take it 10 to 20 years forward, it's going to be an epicenter of technology, of intelligence, of army, and manufacturing is not coming back to the United States. It's just not. So unless you're talking about manufacturing of things that are high end in terms of their finished value, of chips or technology that cannot be replicated in other countries that easily. So you will see an economy that does not reward generalism and rewards only specialism, only special skills, specialized skills. And if you don't have them, you will be displaced. And you will see an economy where 10% of the people are wealthy and 90% of the people do not have assets, are basically 3 weeks from being broke. And this is the model that goes on in the rest of the world. The United States had this miracle called the middle class, but it's over. It's done. In 5 years, there will be no middle class in the United States. I've said that since about 2011. By 2022, there will be no middle class left. There will be 10% of the people that have money, assets, and the proper skills. And the reason they have proper skills is because the government intervened in tuition and made it unaffordable for the rest of the 90%. Because in a free market economy, and this is what, this is the only thing that makes me frustrated about this situation. And this is the reason why we are working on trying to create a foundation to help people in the younger ages, to help children. And it's because education is the key. Financial education is the key to it all. That's the reason why I launched Wealth Research Group, the newsletter, and we cover the economy, and we cover personal finance, and we cover financial education, and we cover opportunities that are in the stock market and outside of it, because it all starts with financial education. If you had more of a core, it takes 7 years to build a foundation of the house and another day or two to furnish it, right? You need that foundation. And in the United States, the problem with this college bubble and with the way that the government intervenes is that there are more job openings right now than there are people to occupy these jobs. Now, in a free market economy, that cannot happen, where there's more job offerings than people to occupy them. How the hell can this happen, that employers cannot find the right employees? Now, think about this. In a free market economy, tuition would be affordable so that these people could be trained and immediately put into jobs, or it would be affordable for companies to train people from scratch and put them to work and get a positive return on investment. There are so many government regulations and so many subsidies and so many incentives for people to stay on the fringes of society. And the college situation is so out of control with student debts and with other forms of debts to the consumer that he just doesn't understand the way that economic cycles work, the way the jobs market work, and the way that he should look at America right now. People are looking at America not as 2018, but as the 1960s or 70s or 80s, and it is not that anymore. In the 1980s, the United States was the largest creditor nation in the world. Today, it's the largest debtor in history. It would take 1,000 companies the size of Apple to achieve a situation where the debt is being able to shrink every year due to tax revenue. It's just not sustainable the way that it is. And to solve it, the government needs to shrink its size incredibly, because it's just intervening in the wrong places and does not allow the economy to prosper.
Well, Lior, let me just jump in, though, and ask you this. I think we're very fortunate that we have President Trump in the White House as opposed to the Wicked Witch, because I've said she would have been the final nail in the coffin of our republic. And that goes for the economy as well. I'm not just talking about the Second Amendment, the First Amendment. I'm not just talking about the Bill of Rights. I'm talking about economic suicide, open borders, higher taxes, higher corporate taxes. She would have put the final nail in our coffin. But let's circle back to where we began. A $1 trillion budget deficit. I mean, that can't end well. So what is your forecast? What do you see? How does this thing play out, and how does it end? And what would you recommend to our listeners in terms of how they can protect themselves? Because we've been wrong about gold and silver now for the past 5 or 6 years. And that money would have been a better bet being placed on Amazon, Apple, and Netflix. So how does this thing ultimately play out?
Well, it's a great question. And the answer is, you cannot compare gold and silver to cash producing assets. It's just not the right comparison to make. And you see people, YouTube is a great place because anyone can appear and voice his opinions, but it's important to understand who you're listening to and what his background is. So when you think about gold and silver...
Well, let me jump in, though, and just say, I mean, we've been hearing Peter Schiff, who I think is a very smart guy, say gold and silver for the past 10 years. So there's been Jim Rogers, very, very educated people, Mark Faber talking about this stuff. So very educated people have been saying, the dollar's doomed, buy precious metals in physical form. So not just random YouTubers. Go ahead.
No, but I agree with you. And let me share with you the way I think you should look at this. So let's think of Berkshire Hathaway, Warren Buffett's company. Warren Buffett keeps about 20 to 25% of the company always in cash. Now, had he had, back in the 70s, started to put about half of the company's cash in gold and silver at that point, and kept on investing in stocks. I'm not talking about stopping to invest in stocks, and I'm not talking about stopping to invest in any cash producing activity. But only the cash hoard, the 20% that he kept in fiat, he would have taken half of that and put it in gold and silver. Don't play with it. Don't trade it. Just everything that the company has, that Berkshire has, keep half of the cash in gold and silver. That would have been a fortune-making decision for Berkshire's shareholders. Now, Buffett is famous for always saying, hey, in the 1940s, if I would have taken my money and put it in gold or put it in stocks would have made much better. And that's absolutely true. There is no reason why an ounce of gold will be a better investment than a company that grows, has more profits year over year, expands, has better margins, and has a killer management. It's a dynamic, organic opportunity and investment, and it will always over-deliver compared to an ounce of gold. That is not the comparison to make. The comparison to make is, what should you do with your cash? Because people do not invest 100% in stocks. It just doesn't happen this way. If they do, that's fine. That's their choice. But I'm talking about the cash hoard that you have, your savings. Those should have a allocation into gold and silver. So compare apples to apples in that regard, and gold and silver remain a very important part of an overall portfolio. Sure, they can have bad years, good years, etc. But overall, over time, gold has compounded at a 6.5% rate since 1971. Silver, much similar. So in a situation like this, there is no argument here. Gold and silver, they outperform fiat currencies over time. But obviously, there are waves and cycles in this world, in this economy. So the price of gold can go down in terms of dollars, and it can go up at the same time in terms of other fiat currencies. You also have to remain aware that gold is a universal currency, and therefore sometimes you'll have opportunities as a gold investor to invest in other countries and not in the United States. For example, if you own gold in countries that are now suffering from crisis or from high inflation, you can really create wealth for yourself because other people are willing to sell their assets at liquidation prices for exchange for your gold. So another key thing here is to understand that gold works better as a way to elevate your purchasing power in countries that have more crisis and less stability. So that's the second part of this. Now, as you make a portfolio and as you make your allocation, what I've done personally is, and this is my own personal strategy, Sean, I've taken 24 months of living expenses, so my lifestyle burn rate, multiplied it by 24 and converted those 2 years of fiat into precious metals in physical form. 80% gold, 20% silver. That's allocated. It sits in vaults, in several vaults throughout the world, and some in my main residence, and that's it. That's the extent of my gold and silver portfolio, which represents 2 years worth of lifestyle burn rate. And so that is how I treat gold as an insurance. Now, if you want to speculate with gold and silver going, on top of that, you can allocate some of your funds and put them either in physical gold and silver or in mining stocks. But this should not be the lion's share of your portfolio.
No, agreed. No, I agree. And, if I could just circle back real quickly to Warren Buffett, who I believe is a tool of the elite, you'll recall that he had 129 million ounces of silver at price between $3.50 and $4 an ounce back in 2002 to 2003. I'm taking this from our buddies over at Silver Doctors. And JP Morgan helped him with that purchase. He was forced to dishoard it at $6 an ounce. And by 2007, silver was up to $17. He was forced into the sale, and it was demanded of him because, you know what I think? I don't think the elites wanted Warren Buffett sending the general public the message that physical gold and physical silver is the place to be. They wanted him to back the dollar and back fiat because I really, truly do believe he's a tool of the elite along with Charlie Munger. Hey, Lior, I apologize. I am a little short on time here today. Would you ever do us a favor, though? Direct us to your websites, and I'll give you the final word here.
Sure. The best way to stay up to date on what we do is to go to wealthresearchgroup.com and obviously subscribe to the free newsletter. This is where I share my own personal portfolio every 2 months. We update on the economy 3 times a week, and obviously we are opportunistic, and we're one of the few newsletters that actually profile companies that we see. The bottom line is that if you want to speculate with gold and silver, the best way to do it is by leveraging the power of the mining shares. I can give you a number of endless examples. In 2016, Wealth Research Group had 12 companies that we profiled that all were double or more. Now, in 2017, we focused on cryptocurrencies. We actually were the first newsletter in the world to cover Ethereum at $12. That coin went over $1,000. And in 2018, we are focusing on a very niched environment of stocks. But I can tell you, with regards to precious metals, the best thing to do right now is to focus on exploration companies because they're driven by drilling results only. They do not care what the price of gold does. If they make a successful drilling hole, then the company changes valuation overnight. So the idea is to position ahead of time. And I can tell you that we've done research on one company right now. You can go to wealthresearchgroup.com /geo. That's just GEO. And you can access our research about a company that's starting to drill this month, and they're going to have drill results out as soon as October. This is the best way to capture the upside of precious metals if you're looking to really make a situation where it's an asymmetric risk, where you take a small sum, but it can become a huge sum overnight with drill results. So that is something we work on Wealth Research Group right now. We want to make sure that investors understand that assets is what creates a retirement right now and not a job. So you need to make sure that you build a portfolio, a fortress of assets that no government can seize and no government can tell you what to do if you have assets in multiple ways and in multiple countries even.
Yeah, that makes perfect sense. I mean, as our listeners know, the big money has all been made in the stock markets and manipulation, I would add. I believe the markets have been so heavily manipulated. I'm shocked to see the Dow where it is and the NASDAQ where it is. Our guest today has been Lior Gantz, the founder of Wealth Research Group. Lior, thanks so much for your time.
Thanks, Sean.
All right. And guys, thanks so much for tuning in. We very much appreciate your support. For real news 24/7, visit us at sgtreport.com. God bless.